Hey everybody, Brian Shannon here from Alphatrends.net. Today's Friday, the 26th of June, 2015. Hope you had a good week of trading. Let's take a look at the numbers. The S&P 500 and the NASDAQ both lost about a half of a percentage point. Semiconductors were hit the hardest with a 3% loss for the week, and the financials were up a little bit. So the bigger market that has been the strongest lately pulled back a little bit, and that is, of course, the biotechs. And bonds continue in their downtrend, now down 8.5% year to date. So let's look at the charts. The S&P 500 remains in an uptrend, of course, on the longer term time frame. It's been a frustrating year for both longs and shorts, as there's been very little follow through for more than a week or so in either direction. So on the daily time frame, let's actually look at it from a year to date standpoint, where we can see that here's the volume weighted average price year to date, and that's down near the 208 level where we saw support at the beginning of this month. So that's going to be continue to be an important level. You might say that it's tracing out a head and shoulders pattern, but I would say that this is just a big mess here over the last several months. And we can look at a trend line, and just as any horizontal level of support isn't necessarily a straight edge line, but more of a band of support, here's the band of trend line support that's potential coming up here as well. So again, a tricky market, but if you focus on the individual names, there's been some great action in those names, and that's what we focus on every single day in Alphatrends. Of course, being aware of what's going on in the overall market forms our bias and tells us basically how much money we should be risking in each trade. When we have the market below a declining 5-day moving average, it doesn't mean we don't take long trades. It means that we're more careful about what we take, and we take smaller share size as a general rule while we have the market in a pullback mode like we do. So the S&P 500 broke a little bit of support here at 211.50 earlier in the week, and then broke another level here at about 210.5. And of course, what that adds up to is a pattern of lower highs and lower lows below that declining 5-day moving average. So looking at a 10-minute time frame, that's we can see it with a little bit more clarity. Next week, we're going to need to see it get back above 210.50 to 211 to become more neutral in the intermediate term, and then we'll see if this market can turn back to positive once again. But it remains a tricky environment for the S&P 500 as far as looking for a trend to establish, to exploit rather, on the trading side. So the NASDAQ did close at new highs on a couple of occasions this week, but didn't muster enough energy to break out and hold on to any gains. It is still above a rising 50-day moving average, although it just closed exactly on that. And we could draw a similar band of trend line support in here for the NASDAQ down in this area. So I think that 108 is really going to be a bigger area that we want to see hold as support. Last week we spoke about 109.50, and that this is the general area we wanted to see hold. And I think 109 to 109.50, if this doesn't hold, then it looks like we're probably headed back down to test these lows. And it's difficult to trust rally attempts for more than a day trade when we have a declining 5-day moving average. So until this market is able to settle down and then turn back higher, buying the NASDAQ, in my opinion, doesn't make sense. The same would go true for the Russell 2000. The Russell 2000 is still clearly in a longer-term uptrend. We'd seen this bigger breakout. That bigger breakout held as support a couple months ago, and now we've just broken another level 2 weeks ago, and that prior band of resistance was tested here today and held as support, so far at least, and we'll look for that level to be able to continue to hold. Basically, when we look at a 30-minute time frame, this is what we want to hold, is about 126.5 to 127. As long as we can remain above that, then we're not going to get bearish by any measure, and it's going to be on the 10-minute time frame. It's not much of a pullback at all, but getting back above 128.5ish should turn it back to positive, and it should be easy for the buyers to regain control. But if they don't regain control, then they don't regain control, and there's no point being a buyer ahead of that because because that's just taking a shot, and that's not professional trading. The semiconductors, again, were the disappointing for the longs this week. But as I mentioned last week, I've been telling Alphatrends subscribers that these are basically a waste of time. I thought they would need to settle down. I didn't expect a big move like that lower. But when you have one of the bigger stocks in the group, which is entrenched in a downtrend and shouldn't have been bought to begin with, disappoint on earnings or whatever happened here today. I didn't read the news, but Micron is a big semiconductor company, and that is going to erode confidence in the semiconductor index. So, for this one, it dropped from 60 down to, let's just call this 56.5. So that's a 3.5 point drop. If we took the 58.5 and took 3.5 points off that, a measured move would bring us down to 55, and I think that's reasonable to think it might head down towards 55, or the 200-day moving average at about 54.5. And if it were to do that, it wouldn't change this longer-term uptrend. We still have higher highs and higher lows. So I think it's just in a void right now in the semiconductors. And financials are, again, a very tricky group. They've been so volatile, but they're grinding higher. They're certainly not a market that I have the patience to trade, but they have they are below a declining 5-day moving average. So intermediate term suggests a little bit of caution. However, it does nothing to change the longer term uptrend. Apple continues to be in a void. We had seen this week that on this 30-minute time frame, it broke the downtrend line that's been intact here over the last month and a half. And breaking a downtrend line does not mean that the market is turning higher. It means the rate of descent has slowed. It broke this resistance as well. That resistance was tested, and then it bounced there briefly, but then failed. And at that point, it made no sense to be long shares of Apple from at least an intermediate term time frame. If you're a longer term investor, it's still in an uptrend, although it's getting tired up here, and I still think eventually we're going to come back down towards 124. It's not that far away, but Apple's really been kind of similar to the S&P 500, that it's not a stock where there's been a lot of opportunity this year. Beyond this one big move, it's just been kind of trading sideways and basically, in my opinion, in a void. Something that people challenged me on, a couple weeks ago, and that's fine, is, the value of the volume weighted average price since a stock came public. And I mentioned Alibaba. You wanted to be very, very aware that it was at the declining volume weighted average price since the IPO, and one is unlikely to get through there because of the rally beforehand had expended the energy getting to that level. A lot of people said, no, it's a good company, etc. And I said, let's focus on the stock, not the company. Good luck. And it failed there, as GoPro seems to be failing now at its volume weighted average price since coming public. So, be aware of the magnitude of the move and when it goes to test an important level of potential support or resistance. Last week we spoke about Twitter, and that Twitter's a broken stock. It continues to be a broken stock. There's really no reason to buy this unless you're gambling on a takeover, which takeover rumors are rampant in stocks and downtrends as bigger position holders create these rumors to try to get out of the shares that they're holding to find buyers to come in and unload those shares. Why do you think this stock remains under pressure? Because there are sellers, big sellers. Boyd continues to hold up well. Longer term investors, I think you still hold it with a stop down around that area. General Dynamics held its gains this week. Don't let this don't let these stocks turn into losers, especially a company like Under Armour, which we spoke about, which continues to move higher. I'm not going to follow up on these stocks. Last week I said, that Western Digital looked vulnerable. Beautiful breakdown from there in 4 days of decline after that, after it broke support. So again, it's in a downtrend, guilty till proven innocent. It held that level there, and very similar to a stock that we shorted in Alphatrends on Thursday, which had a beautiful open this morning, was Bit Auto, BITA. This stock is clearly in a downtrend below a 50, 100, 150, and 200-day moving average, down below the 10, 20, and 50. And we had shorted it yesterday and woke up to a nice gift this morning. So it had been consolidating here, and we had our short triggered right at this point right here. And again, a nice open for that stock today. So the other stocks that I had mentioned, AVGO, we spoke about about this stock that if it could get back above that 144.10 level, that it looked like it should be able to continue to move higher. The caveat was that a stop would go right here. So again, it's not just the breakout that matters. If you buy that breakout, nothing wrong with buying the breakout. But as it turns back down, and as I said, this was where I would put a stop, then you can avoid this type of carnage. And it's nice to see a stock decline like that after you get out with a small loss. It's very gratifying to see it continue lower and to know that your discipline rewarded you for avoiding a bigger loss. CVC is another one that it did trigger a buy over here, that we, as we spoke about on this day, and then it gapped down, took a small loss, and it did rally back up. But you never know if they're going to continue lower. So discipline is more important than trying to nail the top or to stubbornly hold on, such as a stock like Ambarella, which had a real bad week this week. VRSK was another one that we had mentioned last week that briefly performed here, but really didn't amount to anything. In fact, it didn't even trigger a buy. EGHT did trigger a buy, and I'd say worst case stop if you're giving it room is down near 9. Our stop we got stopped out. Lexmark gave no reason to get involved. We spoke about getting involved above $46 a share. It didn't do that. So it shows, why we buy on strength, and then we protect ourselves with stops. We don't want to, end up holding stocks like WLT or stocks like MCP that went bankrupt this past week. Anyways, those are a few ideas. Actually, I wanted to talk about bonds real quick. Bonds continue lower, as they should in a downtrend. We've got a declining 10, 20, 50-day moving average. Money is flowing out of the bond market, and you should expect that any rallies that occur in here are short term. They will be short lived. That is, this type of trend does just not turn itself around real quickly. If they don't scare you out, then they'll typically wear you out.